good morning. We have a group of people ready to come in here. Looks like we've got an even mix of people that have had experience trading Nadex versus those who haven't. So what I'm going to do today is cover basically what Nadex is all about, and then I'm going to engage live markets and execute a couple of trading strategies that I use regularly. It's part of my trading plan. I'm Cam White, and our agenda today will be to start with an overview of what Nadex binary options are. And then at 7 o'clock, I'm going to trade the German DAX market. I call it the Strudel strategy. I trade it almost every day. And then at 9 o'clock, I've got another strategy for the FTSE that I'm going to start off. And then I'm going to hand the ball over to Zachary Hogan and Eddie Viteri from the trading group, who are going to take the opening bell, and they're going to go over indices and Forex pairs and some commodities. So without further ado, let's get started. I hope everyone's doing well. And first of all, where is, we got a little bit of a handle where people are from. Yana, can you put up a map to show where our audience is from? Okay. Lots of folks in the U.S. We got some folks out in Australia, South Africa, in Asia, and in Europe. Nadex is now trading. You can now trade Nadex in 47 countries, and there's a pretty good chance, just glancing at the map, the country that you live in, you can trade Nadex. So with that being said, I'm going to go ahead and get started. First, the obligatory disclaimer. Trading binary options involves risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. And always remember that past performance is not necessarily indicative of future results. Another little disclaimer, because I'm going to be trading the markets live. I publish information that is educational in nature and is designed to contribute to your overall understanding of how I use technical analysis to trade Nadex binary options and Nadex spreads. I am in no way recommending the purchase, sale, or short sale of any securities, options, futures, or other financial instruments. I am not a financial advisor or registered analyst. I do not offer my trading ideas as recommendations for you to copy. These trading ideas represent my own opinions and are intended to demonstrate my style of short-term trading. I am also in no way representing that similar results will be achieved by following my ideas. Trading Nadex binary options and Nadex spreads potential loss, risk, and loss, and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources, as you may lose all of your initial investment. Also, today I've been asked to trade in a demo account, and that's actually pretty cool because I'm going to be doing a lot of things, and you may have some ideas or some suggestions, and I'm going to be trading my plan, but I might also be showing some things that are mistakes, and I don't like making mistakes in a live account. But if you haven't traded Nadex, you're going to see exactly how the demo platform operates, which is identical to the live platform. I'm a partner relationship manager with TradingPub, and TradingPub, what we do is we basically provide free education for trading stocks, options, futures, Forex, and Nadex. I'm responsible for working with partners, matching partners to projects, getting information from them, helping coordinate with Yana and Raleigh, webinars, ebooks, and many of the projects that we put out. And I'm also the in-house Nadex guru for TradingPub. I've been trading Nadex for about a year, and I trade it every day. I put out a monthly newsletter called the Probability Report, which gives you a schedule of free Nadex educational events. I also put in videos and articles that I've either written or come across. And a few times a week, I have a personal blog called The Inquisitive Trader, where I break down trades and show you exactly what I saw in the trade, how it worked out, what the trading rules were, and what the trade results were. And part of that includes a trade of the day where I find either a strategy that I follow or a strategy that someone else is doing that I've been able to replicate. Okay, so for those of you who haven't traded Nadex, this is Nadex in a nutshell. When you trade Nadex binary options or Nadex spreads, you are making a decision about the likely direction of the market relative to a strike price within a defined time period of your choosing. And whether you trade Forex or futures or whatever, every trade starts out with your opinion of where the market's going to go. So Nadex binary options have been called yes or no trades. Each trade has a maximum value of $100 per contract. That means the most you could absolutely win or lose is $100 per contract. You always know in advance of a trade what your maximum risk is going to be and your maximum reward is going to be. And you are once again making a decision about where the market's going to go relative to a strike price within a defined time frame of your choosing. As long as that trade is active within the time period that you've determined, you cannot get stopped out. The trade is live, it's active, it can dip, it can spike, it can do whatever. What's important is where the market settles at expiration. You can hold on to your trade until expiration, or you can get out of the trade early. You can do that to preserve profit, or you can do it to minimize loss if a trade is moving against you. So let's go for an example of how Nadex binary options work. Let's suppose it's 12 o'clock noon and the current price of gold is $12.54 and it's climbing. And you have a strategy in your back pocket for trading gold futures, and all of your indicators agree that gold is on an uptrend. In fact, you believe that the price of gold will not go down by 1:30 when the pits close. It'll continue to go up. If you believe that gold is going to close above 1250 by 1:30 Eastern time, the market could determine there's a 70% chance that you're right. And if that's the case, you would risk $70 to make $30 on a high probability trade. Now let's take a look at the other side of that coin. Let's suppose that the gold is at 1254 and you think there's going to be a reversal, and it's actually going to drop below 1250 by 1:30 p.m. and your indicators are showing that reversal. Well, if it's at 1254 and you think it's going to be below 1250, the marketplace might disagree with you, and they might determine that there's a 30% chance that that's going to happen. And in that particular scenario, you would be risking $30 to make $70 in profit on a lower probability trade. Nadex is the North American Derivatives Exchange. It's a wholly owned subsidiary of the IG Group, which is listed on the FTSE 100 index in London. Nadex is based in Chicago, and it is subject to regulatory oversight by the CFTC. When you trade with Nadex, you trade directly on the exchange. You do not go through a broker, so you don't deal with broker commissions or middlemen commissions. And your member funds are held in a segregated bank account in the U.S. You have full transparency on every trade because, unlike some overseas outfits, you are not trading against the house. Nadex as an exchange is facilitating a transaction between your opinion of what gold is going to do and someone who has an opposing position. So you're not trading against the house, you're trading against somebody else who's a Nadex member who has a contrary opinion to your idea of where the market's going to go. Nadex was previously only available in the US, in Canada, and Mexico. It is now open in 47 countries. And when you go to the Nadex website and click to open up an account, you'll see a drop-down list of all the countries. And eyeballing the map, it looks like almost everyone here could trade. It shows. Okay, so How to place a Nadex binary options trade. Once again, everything starts with your opinion on the direction of the market. There are a lot of markets you can trade from. You can trade from popular Forex pairs, major stock indices, commodities, and you're going to select one of those instruments that you want to trade, and is determine what your expiration time frame is going to be, and that's just a function of your trading personality. You can take a contract on the price of the S&P 500 and where you think it's going to end at the end of the week, or at the end of the day, or within the next hour. They even have 20-minute and 5-minute binary options contracts for certain instruments, certain markets. Then what you want to do is, now I've selected my time frame, what is this market doing? Do I want to buy it or do I want to sell it? And how many contracts do I want to trade? Once you've gotten that information, your time frame, the direction of the market, whether you're going to buy or you're going to sell, what price you want to buy or sell at, you place the order directly on the exchange. And once again, you can either let your contract expire at expiration, or you can close your position out early and take a quick profit or minimize loss if the trade's going against you. And here are the costs with Nadex. First of all, there's a 2-week demo that you can sign up for free. It's going to be funded with a lot of play money, and you can actually trade the strategies I'm talking about. You'll have access to all of the markets that Nadex trades in. The minimum funding for a live account is $100 US. And there are no broker commissions involved with Nadex, but there is an exchange fee, and it's 90 cents per contract per side. And your maximum exchange fees are $9 per side. So if you trade 10 contracts successfully, you'd have $9 to execute the trade and $9 to settle the trade, for $18 total. But if you chose to trade 20 contracts or 50 contracts or 100 contracts, it would still be the same. It's capped at $18 round trip. The other thing that's really nice about Nadex is if your contract expires out of the money or unsuccessfully, you decide to let it expire, it didn't work, you lost what you put up for risk, you're going to be charged the order execution fee because you initiated the trade, but Nadex does not charge you a settlement fee. So because you did not close the position out or execute successfully, you're not penalized. I think that's pretty nice. It's already painful to lose a trade. It's nice to know you're not getting hit with a fee for losing. Quick summary on Nadex binary options. It's a yes or no proposition. You have a limited trade risk. You always know your risk reward before you place a trade. So unlike some leveraged instruments like Forex or futures, trades can't run away from you. You cannot, the disclaimers for futures or Forex, say that you can lose all or more of your initial investment. Well, you can't, that doesn't happen with Nadex. I mean, you could lose whatever you put up for risk, but you can't lose any more because there's no margin call. Your risk that you put up is your margin. You can trade multiple markets. You have spike protection. You can't get stopped out. And it's regulated by the CFTC, and all of your funds are held in a segregated account. Very easy to deposit into your account, and it's also equally easy to withdraw from your account. So now I'm going to jump out of here and take a look at what Nadex is all about. By the way, did that make sense as a general overview of what Nadex is? Yes or no proposition, $100, not getting stopped out, just type a yes or a no. Okay, good. I just want to make sure that I'm not losing anyone. So here's the Nadex demo platform. It functions exactly like the live platform. On the left side of the screen, there's a pick list of all of the instruments that you can trade. Indices, the China index, Hang Seng, FTSE 100, Germany, I'm going to be trading that. The Nikkei, I also trade that market. E-mini S&P, E-mini Dow, E-mini NASDAQ, E-mini Russell. For Forex, 10 pairs, Aussie yen, Aussie dollar, pound dollar, US yen, US franc. Some very good popular Forex pairs. Under commodities, a lot of the popular ones: gold, oil, natural gas, soybean, silver, corn, and copper. So a lot of various instruments you can trade. And right now, what we see in here is I've got a trade that's going on with the actually a spread that I'm running on the pound dollar off of the economic news. I let the news release. I picked up one contract, and right now I'm up 11 pips. And I'm just going to let that run. That's going to run all day long and see how far it can go. And and if that particular trade runs against me, I can just exit out and cut loose. But I think I'm going to be in good shape with this one. So anyway, we are getting at 6 o'clock, and I've got a trade that's going to start that I call the Strudel trade. So I'm going to just kind of jump right into what the Strudel is all about. I'm going to pull up the 7 a.m. to 9 a.m. market. I'm going to come back and describe this. I've got some slides that talk about this, but I'm going to give you a quick overview of this. This is on the German DAX market, and it's pulling up a 5-minute chart. I'm going to switch first to the dailies, and let's just take a look at where that market has been. Last 3 days it's on a slight downtrend. I want to get rid of something right now. Okay, and then moving from the dailies, I'm going to go down to the 4-hour time frame. I like looking at things over multiple time frames. Still on a downtrend. The indicators that I have up here, by the way, this purple line is the 8 EMA. It's also commonly referred to as the T line. What I like about the 8 EMA is that the market tends to follow it really, really nicely, and whenever it gaps away, it always comes back to the roost. This gray indicator is the 50 moving average. I like that just basically to give me an idea. If the market is above the average, you're on an uptrend. If it's below the average, it's on a downtrend. I use MACD, and I also use stochastics to help me with bullish or bearish confirmation or overbought and oversold conditions. I'm going to jump down to the hourly time frame. Here we are today, and you can see that we've been on a downtrend. The market is below the 50 moving average, below the T line. MACD is cycling down, moving toward bearish territory. So we'll take a look and keep a closer eye on that. And I'm just sort of getting a feel for where the market is. 15-minute, we see that trend continuation down. Looks like a bearish bias to me right now. And I'll explain why that's important. 5 minutes, we're running bearish. So everything is, to me right now, is looking like it's bearish. Now the rules for this strategy are super, super simple. Going back to the hourly charts, and I'm going to use yesterday for an example. Okay, get a little drawing tool here. Okay. Let's see here. Okay, yesterday right there, that was the 7 a.m. hourly candlestick. The rules for this strategy are basically the 7 a.m. hourly candlestick controls the 8 o'clock hourly candlestick, and it works like constantly. It's in fact, over the last 3 months, this particular pattern has repeated itself over 90% of the time. So the rules for this is once you are confirmed that the hourly candlestick is bearish in this example, I want to sell from the first strike price above, the Nadex gives me, above the opening price of this candlestick. And I can do that with 90% confidence, knowing that the following candlestick will not violate that strike price. So 90% of the time, once you've confirmed that the hourly direction or the hourly candlestick is bullish or bearish, you want to sell above a bearish candle or buy at the first strike price that Nadex gives you below the opening price. And just for strike prices, let me expand this a little bit. These are the strike prices that Nadex are offering right now, and it has the bid and offer size right there on the charts. So right now, looking at this hourly candlestick, it's developing bearish. It could continue to go down, or as I mentioned, I like this indicator because the market follows it. And whenever the market gaps too far away, it can come back to the roost and touch the line before it continues its downward movement. And with this particular strategy, there can be a temptation to jump in really early and say, hey, it's a bear, I want to buy right now and get the best deal. Well, sometimes, you know, we've got 50 minutes left in this trade. A lot of things can happen in that time. And if it reverses to a bullish candle, I want to be buying and not selling. So patience is a key part of this particular strategy. So we can see that this little hourly candlestick is just sort of bouncing up and down and sort of in the middle of that range. I expect it to continue a downward pattern. And once I feel really good about this particular pattern happening, then what I'm going to do is I'm going to execute a binary selling from this strike price. Well, if this candle develops bearish, I will sell from right here. If it's bullish, I will buy from right there. So we just need to be patient and find out which way that candle is going to develop. The minute I know it, and the minute it's certain, then I know that I've got a better than 90% chance of that trade expiring successfully in the money for me. And risk reward on it, I could get 50 to make 50. I could risk 70 to make 30. But if my odds of success are 90% or better, as long as my risk is less than that, you're going to be pretty good. Okay, I'm going to jump back to my presentation. We'll keep an eye on this market. It's not ready to do what I want to yet. And normally on this trade, unless the market is moving like a locomotive, I normally pull the trigger on this trade a half hour into the trade. But I wanted to give you kind of an overview of what I was looking at. And then also, I'll get back to you later. I'll do a little bit of back testing and I'll show you several days of this strategy and where it's worked. We already covered that day. Let me just give you one more example. Ooh, yeah, that was a big bear. This candle right here is the 7 o'clock candle. 8 o'clock followed, and they kept on going. I ran a spread that day and collected pips all the way down. It was a very nice trade. Let's see. 7 o'clock, doji. On a doji day, I'm going to watch where the next hour is going to develop. It started moving bearish. I sold from north of this area here. That was good. 7 a.m. candlestick, it's a bear. I sell from above. The next hourly candle did not threaten the opening price. And to backtest this, all you need to do is pull up the hourly charts on the DAX and compare the 7 o'clock Eastern Time candle to the 8 o'clock one. Go back as far as you want. I've been doing it for a year. Worst case scenario, it's been about 80% successful. Lately, it's been more like 90% successful. So it's really, really good strategy. Antoinette, it says, what pair is this? This is actually not a currency pair. It's the German DAX market. In Nadex, they call it the Germany 30 market. Okay, I'm going to go back to some Nadex resources. First of all, you can get a Nadex demo that I talked about. Just go to tradingpub.com/demo. You can find the Nadex account by going to tradingpub.com/Nadex. And then full screen. Here's the TradingPub website. And on the TradingPub website, we have a lot of Nadex education. We also have ebooks that you can download. We've just put out a book with 15 Nadex trading strategies. You go down under free education down to Nadex. I mentioned I'm a pretty active blogger, and all of the blogs that I write are archived here. So this is the Strudel strategy I'm going to be doing this morning. There's a afternoon trade that I love to do with the pound dollar. In the evening, I've got sausage and sushi trade with the euro yen. That's also a pretty consistent strategy. DAX, FTSE. I take trades on crude oil. Whenever I can find I even have my third quarter trading plan that basically outlines all of the trades that I follow from 7 o'clock in the morning all the way up to 11 o'clock at night. And I actually roll from time period to time period. I've got a great trade on the Nikkei that's an early evening trade. But they're all archived here at TradingPub. So go to TradingPub, you'll be able to read any one of these strategies, and I really do, or I try to do the best job I can to really break down what I saw in a trade, what the rules of the trade are, how the charts, this is a spread trade that I did, what I saw, where I executed, what the contract details were, and what I was thinking when I took the trade. The probability report, that's probabilityreport.blogspot.com. In there I have I put a calendar of all of July's free Nadex educational events. This is the book that I mentioned we just put out on trading Nadex. It's a great book and it's free. Here's one of my trading strategies on the Nikkei, and I also look for a good video that I can find that talks about someone else's strategy. And this is updated monthly, and so that's also a really good resource. My trading plan, personally, I trade a small account. I funded it with less than a couple $1,000s. I have a daily trading goal of $50 in profits, and I never risk more than 5% of my account balance on any trade when I trade my live account. With any new strategy, I try to test it at least 20 times before I go live. I want to make sure that I understand the rules completely and I have the dexterity to and the results and the track record with that trade before I take it from demo to live. And trading with Nadex, the probability of success on any strategy, the demonstrated probability of success, has to be greater than the risk or my reward per trade. So if I'm risking $80, I've got to have better than an 85% success rate to make 20, and so on and so forth. If I risk $70 to make 30, I want an 80% better success rate. Richard asked, do I use the Pro platform? No. It's just too busy for me. I like just the regular web version of it and not the pro. I'm going to go back to the to Nadex really quickly and take a look at our trade and see how it's developing. Back to the hourly charts. Okay, the last time we looked, it was a bear. Now it's a bull, and I think it could go all the way up to this line here. And if it stays bullish, I'm buying. And if it comes up, touches that line, starts reversing to red, then I'll be selling. I just want to every once in a while go back to that market and see where we are. Okay, placing an order on the Nadex exchanges is what your order ticket looks like, and it basically shows you the market that you're dealing with, the time left until expiration of that particular contract, what the underlying index is telling you, what the value of the market is. You have your bid and your offer spread, and then you indicate whether you want to buy or sell that proposition, how many contracts you're going to be trading, and the price. The ticket will automatically be populated with a market price if you're buying or selling. So you can take that as a market order if that's what you like. And at the bottom of the ticket, I like it because it shows you always at a glance what your maximum loss could be on that contract and what your maximum reward could be, or your maximum profit. So if I like where I am in the market, I can take a market order. More often than not, I like to place a working order or a pending order. And that's basically a good till cancel order where I determine the price under which I want to buy or sell the market. So if I've got plenty of time left in a trade, what I will do is put an order in. Going back to this market, we're back in bear territory. Well, it's doji now. I think it's going to go bearish. So for right now, I'm in demo. I'm going to place a sell order because I'm moving in the overall direction of the market. And I will sell one contract. Price is $24.25. You know what? It could come back up here a little bit. Instead of risking 75 to make 25, I'm going to see if I can risk 65 to make 35. And now it's just going to sit up there as a pending order at the strike price that I want to sell. Oops, I don't want that strike price. Get out of here. I'm going to delete that ticket so it's easy to cancel orders also. This is the one I want. Current market is selling at 37.75. I can sell this thing, and it's 37 right now. I'm going to sell it for 45, so it's closer to at the money. My maximum loss would be $55, and my maximum profit would be $45. I'm going to place that. Now it's up there, but if you were really certain that this market was going to be bearish, that strike above actually wouldn't be a bad strike to take. Sometimes I'll actually double up some contracts further away from the market just as insurance in the event that the strike price that I really like gets threatened. And once this is confirmed bearish, if it stays bearish, we still have, oh gosh, plenty of time in the first hour. We have 40 minutes left here, so a lot of things can happen. But after the half-hour market, I'm going to start thinking about a spread. And I'll pop that in, and as soon as I get the spread to take, and it moves in the direction that I want, then it's going to be a daily spread. I can run as far as I want to. Question from Manila is, what's the expiration on this trade? It's 9 o'clock Eastern time, so I'm an hour and 39 minutes away from the finish line. And when you look at this, particular screen, that red vertical line, that's the finish line right there. So if I move down to a 5-minute chart, you can see the market relative to the finish line, this red line right here. You can see that it's moving on a downtrend, and where's my little? You can see that the market's on a downtrend right now. I am selling the market. I have a pending order right here. So at 9 o'clock, this market needs to stay below this line right here. If that happens and my order fills, I'll be in good shape. Right now, I went 45. The market is 27. I need this market to retrace to about right there. If it bounces back up and retraces a little bit, then this order will get filled, and I'll feel pretty good about picking up $45 on 55 risk. By the way, is this all making sense? It's second nature to me. So if I'm losing anyone, then says, what's the expiration on the spreads? I use a daily expiration on the spread. So once I catch a spread, I'm going to just let it run until it either maxes out the profit or until I see a reversal and the trade starts going against me. And just the other thing that's just important about spreads like conventional trading, you need to know where to cut your losses and not try to hope that the market's going to reverse if it's coming against you. I mean, you need to be pretty disciplined about taking your lumps if the market reverses on you. So, by the way, I'm going to be covering this particular trade. Let me go back to my hourlies because, you know, one thing I really like about this trade is that, yeah, I've got some indicators in here, but you don't have to get hung up on indicators. I like really clean charts. And at the end of the day, all you have to go back to the hourly chart. All you have to do is watch the development of this candlestick and just stay on it. You can dial down to various, time frames, but the hourly is what you're basing your decision on. And it just doesn't get much more simple than that. If it continues its bearish trajectory, then I'm going to if it continues the bearish trajectory, I sell from this strike. That's where I have my pending order right now. If it reversed and started coming back bullish, I would cancel out of this order and I would buy from this strike. So I'm going to go back to my my little presentation. It's looking pretty bearish right now. I've got a bearish order in there. And I'm going to give it about 5 more minutes before I decide, yeah, the bears are starting to run on me. Okay, I got to stop right here. I'm going to do a spread. Pull up this is my little finder. I'm going to go to indices and spreads. And Germany 30. And it offers you a daily spread. 11.48. I want to pick a spread. I'm going to sell where the ceiling of the spread. I'm going to get into spreads a little bit more. Is closest to where my risk is. I'm going to pull up an order ticket. I'm going to sell. Tell you what, I'm in demo. I'm going to treat this like a forex spread or a future spread where $1 controls $10, or where every tick is a $10 move in price. Okay, it's 492 is where we are right now. So it's going to take it. get in? No, it's still a pending order. Okay, the current market is 11,491. 493. Okay, I'm in. So that order's taken, and so immediately when that order takes, I'm $30 down, or I'm $3 down per contract. That's just the bid-ask spread. And now we're just going to let this thing germinate. Yeah, the pound dollar started waffling. I was up 11, 12. I was actually up about 15 pips. It's moved back north, but I've got 7 hours left in this thing. So I'm not going to worry about canceling any of these or exiting any of these things unless I'm threatened. On the Germany 31, I'm down $10 right now. I stand to make $900 maximum profit. If I get past about 150 or so and I don't like the direction, or if it looks like it's doing a big reversal on me, I'll exit out. That's just the price you pay for trading. But right now, I'm feeling pretty good about this spread and running in the direction I want it to run in. For those people that haven't traded with Nadex before, is this making sense? Gary asked me what the maximum risk is. I'm risking more than I am than my reward will be on this. When I eyeball that thing, let's see. Yeah, it was like 1070. It was like 1070 risk for 930 gain. So it's about 50-50. I'm not so much worried about my maximum risk on spreads. I want to keep my eye on them, and I want to make sure that I made a decision. But what I like about spreads in this particular strategy is, remember I said that this particular strategy is currently running about 90% success rate. That means 90. That's a strong directional proposition. Let's go back the other day here. This one made me sick because I haven't been trading Nadex spreads that long, so I'm still kind of working with my dexterity on spreads. But I sold a spread up here, and I was risking $700 to make $1,300. And I said, well, gosh, I'm risking 20 pips. That'll be cool. I'll take that. That was my profit target. I had it locked in my head, and I reached my profit target. Oh, right about there, and I cashed out. And I was all happy that I made $200, but what I wound up doing was leaving like $1,100 on the table. The thing shot all the way through the floor, and it would have been an enormous day for me. Instead, it was a pretty good day. So Gary, do you still use 5% max of the account value? Absolutely. So if I were trading my live account, I would only be trading one contract. For the reason why I have a 10 contract spread up here is not to show some flashy numbers. I just know that many of the people that are in this room that haven't traded Nadex may be more comfortable trading Forex or futures, where they're used to getting a proposition where $1 controls $10. And so when I go back to where I am right now, I'm up 1 pip on the German index. I'm up $10, up 2 pips now, 3 pips, so 4 pips. So this is what Forex and futures traders are more used to seeing. But trading out of a small account, would I be trading 10 contracts? Absolutely not. I'd be trading one account, and I'd be up a couple of dollars versus $1 versus $10. Okay, so let me go back to the trading rules for the with the strategy. Once again, a reminder, I'm right now trading what I call the Strudel strategy. It runs from 7 o'clock to 9 o'clock in the morning. Following that, I've got the FTSE strategy. It's exactly the same strategy as the Strudel, but it works for the FTSE 100 between 9 and 11. And I'll get into that a little bit. So I'm going to get the FTSE trade launched, and then I'm going to pass this over to the folks at Trading Group to take o'clock Eastern time. So here's where the whole Strudel strategy came from. I was sitting in on a webinar with TradingPub, and Tom Busby from Diversified Trading Institute, who's been trading for since the 70s, I believe. He was one of the people that was really instrumental for bringing the DAX market to the U.S. and making it traded. And he was doing a webinar with 30 trading observations, and he was moving really quick from point to point. But he made a comment, and he said, "Hey, folks, the 7 a.m. Eastern hourly bar with the candlestick with the DAX controls the next couple of hours." And then he moved on. And I stopped for a second. I was glad I was listening. I said, if that's true, that's a very binary proposition. So I went in and I back tested, and sure enough, at that time, like 18 out of 20 days, he was correct. And I went back a little bit further, and the same pattern held. So I developed some test criteria for this particular trade, and I'll show you how that played out. But what you do basically is what I've done. You check the 7 o'clock Eastern Standard Time DAX market. You watch the development of the 7 a.m. hourly candlestick. If it's bearish, sell above. If it's bullish, buy from below the 7 a.m. candlestick. What I do in prepping for this particular event is I always start out by checking the economic calendar. You can use Forex Factory or whatever. I like investing.com. There was some economic news out of the UK that prompted me to put on my little spread sell on the pound dollar. We've got in 57 minutes, we've got some economic news, medium impact out of the US, initial jobless claims. So that'll be something to keep an eye on. One of the questions I get about this particular trade, because the DAX does have a tendency to mirror the S&P 500, it kind of, especially closer to the opening bell, is how news affects this particular trade. And particularly really high impact news like the non-farm payroll reports or an FOMC statement. But most of the time, I mean, 90% of the time, the rules of this strategy just behave by themselves. So I don't get overly hung up on news. I get a little bit concerned, but I have to remind myself that 90% of the time, this trade manages itself. So am I aware of news? Of course I am. But I don't let it really consume me with this particular trade. I check the market on the daily, hourly, 15 and 5-minute charts. We want to see if the DAX is moving up or down. The indicators I use is the T line, which is the 8 exponential moving average. I use the 50-period simple moving average. Slow stochastic oscillator is set at 12.33, and I'll dial down to the 5-minute time frame and take a quick look and see how the market is moving relative to the Ichimoku cloud. And then what I do is I want to confirm that the hourly candlestick is bearish or bullish, and this sucker is turning into a big bear. Right now it's sitting around 18. You know what? I don't see it coming back much. I'm not going to get $45 on that. I'll risk $80 to make 20 and call it a day. Maybe it'll come back $1 or so and pick me up. I'm sort of fine-tuning this one here, but I don't see this market jumping back up, which is fine. I mean, if this thing is running hard downward, I just know that there's very, very little chance that the next candlestick is going to, oops, that the next candlestick is going to threaten me. So it's moving down here. The next candlestick would have to come all the way past here. Can it happen? Of course it can. I just don't see it happening. That's pretty rare. Oh, okay, I just took. So I put a pending order. The market was at 1875. I didn't want that. I wanted 20. So I picked up an extra dollar or so per contract. Okay, so once again, with the Strudel strategy, if the hourly candlestick is bullish, then I want to buy from the first strike price that Nadex offers below the opening price of that candlestick. If it's bearish, I want to sell from the first Nadex strike price above the opening candlestick. I've got two orders in the marketplace. One's a binary option, one is a spread. So we'll see how those work out. And I place an order that suits my risk-reward preferences. And as long as my risk-reward is below the probabilities of success, you know, I feel pretty good about it. I mean, it would be great to get a 1-to-1 every time. That's not really realistic, particularly on a day like today. But you know, as long as I can pick up more, you know, $20 to $50, I'm fine per contract. Okay, recent Strudel history. I'm going to skip this slide because I'll get back to that. Exceptions to the rule of this strategy, and that is getting in the way of a falling knife. This market here, this is an hourly chart, is on a very steep downtrend. And this blue line is the T line, or the 8 EMA. The market comes down, it gaps away from the T line, and it's going to have to come back and touch it. In this particular example, the 7 a.m. candlestick is bullish, but all it is a retrace back to the T line before the market continues its downtrend. And you want to keep an eye out for that. If you see a very sharp pattern in the 7 a.m. hourly candlestick, looks like it's just a pullback versus a reversal, a little extra caution is warranted. Okay. So when I first found out about this strategy, it was way back in, well, around this time last year is when I first heard about it. And I decided to go into a very disciplined testing protocol for this particular strategy. I was brand new to trading Nadex. So I was going to give this thing 40 trades in demo before I went live. So I had to set up my trading rules. And basically, the rules were very strict. I had a risk reward of 1-to-1, risk 50 to make 50. It assumed that I was opening an account with a $500 balance. I did not exit any contracts early. They either won or they lost. So they all got held till expiration. And here's how it worked out. I have 4 10-day trading periods here. From September 17th through 30th, 2014, first day of 10-day period, I had 8 wins and 2 losses for a gain of $300, risking 50 to make 50. Next 10 days, I had 9 wins and 1 loss, picking up 400. The following 10 days, I had 2 days that were no fills, and I had 2 losses and 6 wins, picking up a net of 200. And then finally, I had 1 no fill, 3 losses, and the balance wins for 100 for 200. The net result was, after 40 trades in demo, using the same rules every day, I had 29 successful trades, which brought me in $1,450 or a 72.5% win rate. I had 8 unsuccessful trades that cost me $400. I had 3 no-fills that cost me nothing for a net profit of $1,050. It took my hypothetical $500 opening balance up to $1,550. When you back out the roughly $60 in exchange fees for executing those transactions, it left my balance, my account balance, at $1,490.60, which was a 200% return on a $500 opening balance within 40 trading days, using a 1-to-1 risk-reward criteria and no trades being exited early. So that was back then, and it held fine throughout the fourth quarter. Going into the first quarter of this year, the odds of success went up, and it was like with more volatility in the market, this strategy actually works better in terms of the 7 a.m. strategy, 7 a.m. bar control and the 8 a.m. bar, but a lot of those trades just ran away from me. Kind of like today, where we're seeing a lot of bearish momentum in here. I can't get 50. Well, I could have gotten, maybe, if I were paying attention, I might have gotten risk 50 to make 50 right here. Might have gotten it, because the wick is above there. So could have been a fill, but more often than not lately, I've been seeing a lot of very big bearish or bullish candles, and it's hard to get a 1-to-1 risk reward. You know, you have a greater certainty of your trade. I mean, there's like no stress in a trade that you can get and it's running away from you. So could have gotten it today, but you know, woulda, coulda, shoulda. We're still looking really good here, and I don't think that my trade's going to be threatened. Yeah, I don't think so. I was just looking at that a little bit closer. We're in doji territory. Yeah, see, right now the hourly candlestick is starting to move the other way, but this kind of goes back to that falling knife thing, where we've got a pretty sharp downtrend going in here. The likelihood of this marketplace making a huge reversal could happen, in which case I'm going to have to bail for a loss. But right now, I'm feeling pretty good with it. And what I really want this thing to do is to head south and help out with my spread, because my spread's not looking good right now. It's down 19 pips, and it just needs to move in the other direction and behave. But I've got plenty of time on that. I think this market's going to continue to move downward. If not, that's what trading is all about. Okay, moving on. So you saw the past, I showed you some trade results over a year ago. Now let me go to the past 10 trading days. On the DAX strategy, if I placed a binary option and got that trade executed, risking $20 to $50 or whatever, 9 times out of 10 I would have won. It would have expired, and by winning, I mean the pattern held and the trade would have expired in the money. I also have this little column over here that says pips. If I saw a spread that was also moving in that direction, these are the number of pips that I could have made on that. So if I was trading one contract, I would have picked up $363. If I was trading 10 contracts, it would be $3,600. And if the average risk, if the average reward, on these trades over here was $30, I'd be picking up $270 on the binaries. The strategy I'm going to be going into next is actually historically a little bit less successful than the Strudel strategy, and that's with the FTSE. Since over the past 3 months, that particular strategy has been about running a little bit over 75% success rate. Still really strong. Just the past 10 days, it was also 9-1. So there were fewer pips to be picked up, but still on the binary side, 200 with the same risk reward roughly, that would have been another $270. Just trading a 7 a.m. to 9 a.m. trade that closes out when you start into this period. And then I've got a strategy from 11 to 1, one from 12 to 7, and then a couple of evening strategies. And I just keep an eye on all of them. A little bit more about Nadex spreads. On spreads, you're basically dealing with a box. You have a floor and a ceiling. In this particular case, I decided to make it a 200-point spread, which is what I'm trading right now on the German market. And basically, you find the strike price. If you're selling the market, then everything from where your strike price is to the ceiling is your maximum risk. You can't if the market shoots all the way through the ceiling, you can't lose any more. Which is why I like the defined risk aspect of Nadex, of trading with Nadex. I just personally can't stomach the idea of a trade that runs away from you and blows through a stop or whatever. And then your reward is this area down below the strike price. That's your maximum reward. So somewhere along the line, you may have a take profit target and just exit out, or you may have a loss, a maximum, a loss target. Right now, $200, I'm at 210 right now. I still think this market's going to move down. I don't think we're looking for a reversal. I'll stay patient on that because this market, unless it decides to just completely turn around, looks like it's behaving and will work its way back down. Still kind of break even right now on the pound dollar transaction, and I'm still not too worried about my binary or the spread trade that I have going on. But if you hear me yell, it'll just be because I'm panicking. Okay. So spreads, the left and the right wall of the box, that's where the spread opens and that's where it expires. You have a ceiling and a floor. That's the price spread of the price difference of the spread. In this particular case, it's 200 points. So the risk here might be 70 points or $70. The reward would be $130 for a total of 200 points. Okay, the next trade that I'm going to be talking about once this trade closes out is the FTSE 100 brunch spread, and it's exactly the same as the DAX trade. What I'm going to do is I'm going to jump over to the FTSE market and take a look at the development of the 9 a.m. hourly candle. If it's bullish, I'm going to buy. If it's bearish, I'm going to sell. Okay, I'm going to jump back to the markets over here and follow our little Germany trade and see what's going on over here. Looking at it on a 5-minute chart. There are a lot of indicators you can pull up also. I mean, I like my charts really, really clean, but Nadex gives you some pretty popular indicators you can work with. I can pull up the stochastics that I mentioned earlier, and I set them on 12.33, and it tells me that we are moving from oversold up into overbought territory, but we still have a little ways to go here. MACD is crossing over bullish, So looks like on a 5-minute chart that we might actually run up a little bit. Here's my strike price right here, so I want to keep an eye on that and make sure that, once again, what I'm looking at is this line up here and this finish line. You know, if this marketplace settles above this line, I lose. If it stays below, I win on this binary. And so there we are right now. Other indicators I can put up there are for folks that like things like the cloud. Okay, we can see that let me close up this map. Right now it's trading underneath the cloud, which is cool. That's a nice little bearish indicator. For those that like to use Bollinger Bands, there we go. Close up this RSI. I mean this stochastics too. Williams Awesome Oscillator. But for me, I keep it pretty simple. I like MACD. I like stochastics. Every once in a while, I'll take a look at the RSI. But this strategy here, I have a lot of people that ask me that really get hung up on indicators. And, you know, indicators are fine for a lot of strategies. For this particular one, it really comes back to, is that hourly candlestick bearish or bullish? Right now, it's almost a doji right now. In fact, it is a doji. But we'll see how it develops. And right now, the bias is toward the downside. Even if it develops slightly bullish, like it's a slightly bullish doji, I'm not going to freak out and cancel this order because it could be a head fake. This market is on too much of a downward trend right now. But if it behaves really nicely for demonstrations purposes, within the next 7 minutes, this thing will drop down, show me a nice little bearish signal, and confirm that it was a sell. And with that being said, folks, I'm going to take a quick couple-minute break and refill my coffee. Okay, I'm back. Are there any questions right now that I can? Okay, Nyla says, are you able to pull up charts in Nadex? I always use TOS. Yes, you can in Nadex, and you need to be able to use and understand Nadex charts. Just because Thinkorswim does not give you a live feed for the DAX or for the FTSE or for the Nikkei, which are three strategies that work pretty darn successfully with Nadex. So just to show you where to find that, I'm going to exit out of this chart here for a second and show you how I found it. So when you do this strategy, I was looking for the 7 a.m. to 9 a.m. time frame, so that's right here. And you'll see to the right of it this little icon that's like a little chart thing. So when you click on that, it'll pull up the chart for that time period with the strike prices loaded up. And then I click on this icon up here to expand the chart to full screen. And there you go. Now, oftentimes you'll see the strike prices and you'll see these little flags in between there. It just tells me that the chart has been compressed a little bit. if I click on one of those little flags, it'll open up the chart and show me all of the strike prices that Nadex is offering. And with Nadex and the German strategy, strike prices are set at 20-point intervals. So where are we? We're 658. We're still looking bearish. Just stay bearish for me. By the way, just a little feedback from you folks. Is this presentation helpful? Are you learning something from it, or am I just talking and blabbering? Okay. Great, thanks. I like the feedback. Because I'm like in my own little zone right now. Okay, yep, we're 47 seconds away. We're looking at a bearish hourly candlestick. Stay bearish for me. That will make me look good. It's very important that I look good. Explain my reason for the 50 simple moving average. It's just another indicator that I like that gives me a look at whether the marketplace is traveling bearish or bullish. If it's below the 50 simple moving average, pretty good chance you're going to stay bearish. If it's above, bullish. If there's a crossover, it shows me that there's a potential reversal. Okay, so we closed out barely bearish, and that makes me feel very good about the strike price that I selected. So here's where the 7 a.m. candlestick closed, right there. And I'm selling from right here into a sharp downtrend. This little move up here, this wick up here, was just a move to try to get back up to the T line. I'm expecting this candle to continue its downward path. It will make this binary good over here, and the spread does not expire at 9 o'clock. That's running all day. So as long as we have confirmation, the next couple of hours could be bearish. And if this market grinds its way down like that, that'll make my spread very good. And if not, I'll just have to take it for break even, a slight loss, and just get out of it. Okay. Yeah, this little candle here, let me just drop down to a smaller time frame now. Let's see what's happening in the 1-minute charts. Okay, I'm going to pop up a couple of indicators now. Okay, on the 1 minute, we crossed from under the 50 moving average to over. The marketplace is riding above the T line. MACD looks like it's about to cycle bullish again. I'm seeing a slight move upward. Going back to the hourlies, that doesn't surprise me a whole lot because there's still a fair gap from the T line, but it's not bad. I could see maybe this hour jumping up a little bit further and then turning right back around and heading south. Do I ever use the Arun or the directional indicator? No, I don't. I haven't played around with that, but you know, trading is a journey. I'll take a look at it sometime. But going back again to this particular strategy, 90% of the time in recent history, if this hourly pattern develops, where you go, we had a slightly a bearish candle, almost doji on downtrend. 90% of the time, this strike price up here will not be violated. Just grab my little marker here. That strike price won't be violated. And the day before, okay, there's a 7 a.m. bear followed by a bear. The opening, if I sold above that candle, there's no way it was being touched. Go back the next day. Yeah, this one was still enormous. Boom. Big giant day. Great day for a spread. This day, doji followed. This doji, that's where you're just going to want to watch what's happening in the next hour. No particular directional bias. It went bearish. I sold from above the 7 a.m. candle. I was fine. Day before, bear, sell above the bear, you're good. It wasn't even challenged. Day before, oh yeah. Bull, big bull. That one's good. Let's see, day before that. Okay, this one is kind of interesting. We have a bullish candlestick, which when you buy below it, it finished bearish. They kind of finished at a dead heat, so you're going, how did that one play out? It actually won because the strike price that I usually choose has enough of a buffer underneath where I'm buying that it's hard to threaten. So that day was actually good. So if you're back testing and it looks like it's a tie, give a tie to the 7 a.m. candlestick, because in all likelihood your strike price would have been many pips below, or several pips below the opening of the candlestick price. And if it turns out, by the way, that the 7 a.m. hour candlestick, the opening price is sitting right on a proposition, whether you're buying or selling, I will then move back to the following strike price and move 20 pips away, rather than, selling directly from that line. I'm not sure whether I made any sense with that, but I like to give myself a little safety in this trade. And that's how I get the results. Let's see this one here. 7, bear, bear. That one's fine. Here's a loser. Bullish candlestick right there. I bought and I got killed on the next one. That one blew up on me, so I had a loss. Bull, good. Anyway, I'm not going to belabor this thing, but if you use the hourly charts on the DAX and the FTSE strategy coming up after this and go backwards, you're going to find tons of wins according to the strategy and very, very few losses. Just to let you know, also in the evening from 7 o'clock my time, 8 o'clock to 10 o'clock Eastern time, I do the same strategy on the Nikkei, and it works like a charm. That's running 85%. So I've got this simple strategy that repeats itself in several markets, and actually, if Nadex offered sort of hourly expirations in the evening on the China market, there would also be an opportunity on that particular index. Going back to where we are right now. Oh, we're just having a doji day. A whole lot of indecision going on here, but you're on a downtrend, so start behaving. Act like you're on a downtrend. What, Davidson, what time on the Nikkei? It's the same strategy as what I'm talking about now, where the 8 o'clock p.m. Eastern Time hourly bar controls the 9 a.m. bar. So you would use the 8 p.m. to 9 p.m. Eastern Time expiration time period for that. And I call that the kanpai trade. I got to give good names for all my trade. Kanpai is Japanese for cheers, and we've been doing a lot of that lately with this particular trade. Kanpai! Kanpai, exactly, Ann. Yeah, we've done that quite a few times. There are a few groups out there for people that are looking sort of for people that do the Facebook thing. There are a couple of groups out there that are particularly good that are sort of independent groups. One that Ann started up something called Nadex Strategies. Let me find it real quick. Okay, come on, load it up, baby. When computers don't behave. You can load up anytime you want, or not. Okay, yeah, so here it is. It's called Nadex Strategies. You can look it up on Facebook, or it's facebook.com/groups, Nadex Strategies. You know, I'll post some trade results up there. It's basically, this is a Facebook group where people basically exchange what ideas, what strategies they're working on, and what their results are, and what their trading rules are, and it's tightly moderated against spam. So if people come flying in there trying to sell their indicators, they get booted out pretty quickly. It's a pretty clean group, and it's just nobody's selling anything. Traders, it's just traders sharing ideas. So that's a good group. There's another group called that's also in the same vein, Nadex Trading Ideas, which is also a lot of people just sharing ideas. And so what we try to keep, here's in fact, here's something I posted. I post the blog that I write, and basically my look at my take on a few strategies, and try to contribute some things to those particular groups. So for those folks that do the social media thing, it's actually a good way to sort of share ideas with other traders about how they implement certain strategies. Okay, how are we doing? This little trade, on the one day that you trade this thing live, this thing is this thing is misbehaving on me a little bit. Nothing really big here, but at the end of the day, if this candle, we got 47 minutes left, still not too worried about this. But if it does threaten me, I'll just exit gracefully for a little loss. Right now, I'm still good. The marketplace is still traveling under where my strike price is. There's my expiration. This is a 5-minute chart. Not really too worried about this, but if the marketplace does start to do this and starts to head north, if it gets past this strike with this much time left, yeah, it's time to cut your losses. And I'm also really excited, just going into before the opening bell. I'm really excited to see what the trading group has up their sleeve. They'll be covering their view on how they trade the markets, and they'll be covering the opening bell with the U.S. indices from 9:30 Eastern time to 10, I believe, and then they might switch over and show some of their strategies with commodities and forex pairs. All right. So in the meantime, any questions? This is a pretty easy trade. I mean, with any of these trades, by the way, I recommend please don't take my word for it. Do your own back testing um, with this and see if you don't see the same results. If you do it, take it a few times in demo mode before you consider going live. Make sure you're comfortable with, the development of the hourly candlestick and where to buy and where to sell. And you should be good to go. The number one biggest mistake that people make with this particular strategy is to jump the gun and place their buy or sell order too early. I mean, I see people that, and I used to do it myself. I would be so convinced that the 7 a.m. hourly candlestick would be bearish at 7:05, and I would place my sell order, and the market would turn into a big bull, and I'd have to, take my lumps and exit the trade. And it's just not necessary, because when you do your back testing and you take a look at those hourly charts like I was showing you, it's amazing how a simple rule repeats itself over and over and over again. So just be patient. Sometimes I don't pull the trigger on this trade until 5 minutes the hour, because it's just because I don't see a clear directional movement. It's sideways. It's like a doji. What's going on? And that's where just patience is warranted. So right now, let's see where we're going. I'm on a 5 minute chart. Let me just dial it into a 1 minute chart. By the way, does anyone want to see some other markets while I'm hanging around? Yes, this trade will expire at 9. We've got 43 minutes left in this particular trade. It's doing what I want to do. It's finally starting to behave a little bit. I want it to behave a lot more. In fact, I just want, what I really want to see is, I want to see that happen. But markets never do what I want to, especially when I'm trading live. Okay, so let's clear out a comment here. Kim wants to take a look at crude oil. Let's jump over to crude. I will take a look at the, well, I'll take a look at the, I'll tell you what, let's have a little game with crude. This is where it's fun to be on a demo account, because this really can't hurt me. We'll make a group decision about crude. Let's jump to a 15-minute chart. Take a look at crude on the hourlies. Okay, man, it's just kind of chopping sideways below the T line, above it, get down below. Now it's breaching it again. MACD on the hourlies is moving up. Let me see what else I can see. Let me pull up the RSI. size is kind of in the middle there. It's sort of trending upward slightly. It's at 41.8, under 50. Ew, boy, that's sideways. And I've got 1 hour and 41 minutes left in this particular trade. So we're stuck between 49.27 and 49.47. So I'm going to grab my little drawing tool, and I'm going to say, I'm going to take this strike price here. Will the market be, in the next hour and 40 minutes, will the market be above or below this line? Type an A or a B. A for above, B for below. A, B, B, A. A's have it, but David says the trend is down. Oil inventories were actually yesterday. Natural gas is today. So it looks like the aboves have it over here. So let's clean that out. So currently the market is at 44.50 for that. The next thing is, what price do I want this at? Hasn't quite gotten there. Right now, it's a little bit out of the money. If you think you're going to do it, I might actually take it right now. I'll put in one contract to buy. And at 40, it says 46 now. Where did I have it? At 44.50. I'll let it stay there, see if the market will tick back and pick me up. And then for this to be successful, I'm buying, this is what we call an out of the, well, it's more at the money, but it's out of the money. The market is trading below here, but we're buying up here. So this this particular candle is going to need to make it above that line. Okay, just filled. It's going to need to cross above this line in the, at 10 o'clock a.m. for this to be successful. And if that happens, then I'm going to pick up $55 in profit. If the market moves above here, at or above here, this negative value right here, where it's minus 525, will actually start turning positive. And this thing could grind up to, let's say, you know, $25, $30, $40 maybe. And if it gets up, if this becomes big enough, then you have a decision to make about whether you want to exit early, take most of the profit available in that trade, and leave some on the table for a sure thing. Or you can ride it till expiration, and you know there's always that risk the market's going to reverse, especially with a really volatile market like crude. My personal take, I don't trade crude much, but when I do trade crude, as soon as I get a profit, I get out of the jungle. Can I add volume on this chart? Yes, I can. So right now, there's not a whole lot of volume showing right now on the hourlies. Let's go down to 5 minutes and see if I can see any appreciable uptick in. Last traded volume was 281 over here, 54. So you can get a sense of it. I mean, the Nadex charts are all right if you use charting software like Thinkorswim or NinjaTrader, you have some pretty advanced charting tools you can use for like market profile and everything else. For the strategies that I'm talking about, the DAX and the FTSE, really all you need is just to watch a candlestick. And I mean, I could sit on a desert island with no indicators and trade this. I'm going to go back to my Germany trade. Pound dollar, I'm down 4 pips on that. My spread that I'm running on the Strudel, that's got 7 hours and 35 minutes until expiration. I'm down 13 pips on that. I'm not too worried about it. I still think it can move to the downside. Here's my crude oil trade in the bottom. Okay. And my binary option, which has 35 minutes left in it, is currently down. By the way, the actual indicative of it is if the market, if it expired right now, get rid of some of these indicators up here. If the market expired right now, I would receive full profit. So why is it showing that I'm 11.75 down? That's just the spread between bid and offer. I mean, if I dumped out right now, I'm not going to get my profit, my full profit where the market is. It would need to come down. Once it gets down to about right there, this negative 70.75 will probably turn into like a positive 7.75, and I'll start being good to the good. Kim asked, when do I trade spreads and when do I trade binaries? I used to almost exclusively trade binaries. Lately, because these trades are so directionally biased, I mean, the 7 a.m. control and the 8, I started incorporating some spreads in there as well. And then my trigger for placing a spread order is as soon as I'm convinced that the 7 a.m. hourly candlestick is going to be bullish or bearish. The minute I've got that conviction that it's going to be that way, that's when I'll pull the trigger on a spread. And then I'll just keep an eye on it to make sure, you know, if the market does move against me, I just have to cut my losses early. But the other day, good Lord, I mean, you know, I had a spread that it was a 200-point spread. My risk was 70 points. My reward was 13 points. And I was doing a demo trade with 10 contracts, so I could get the same kind of leverage that, you know, most futures traders get. And that thing ran all the way to the floor. I mean, it picked up, I exited for a $200 profit, but the market absolutely dove on me, went through the floor of the spread, and I could have picked up $1,300. So that just got me to looking and doing some analysis. I was doing some back testing. When I pulled up that chart, let me go back to that. For the last 10 trading days. This little column that has the pips, you know, that wasn't necessary. I mean, there were more pips here. The criteria I used for actually selecting these numbers was I look at each candle and I thought, when would I have been likely to determine that this was a sell or a buy? So it wasn't, you know, most of these pips, the start point for it was near the end of the 7 a.m. candle, which is where I probably would have made the decision. So this is not exact science, but pretty close to where I would have made a decision. So yeah, there were a couple of days, 120 pips there. That's super nice. 100 pips over here, and then $20 here, 45, 32. I mean, that after a while, that adds up to real money. Jason is asking where the DAX will be at 10 a.m. You know, I get a lot of questions about about this strategy and where I think it's going to go after after 9 a.m. What's the 10 o'clock hour? The 11 o'clock hour? I don't know, because literally I move on to the FTSE. I move on to other things. My mind is kind of geared into simple, repeatable patterns, and this is one of those patterns. There's another time frame that somebody actually turned me on to with this particular strategy that's starting to look kind of interesting, and it appears that this pattern repeats itself from 12 o'clock Eastern Time to 1 o'clock Eastern Time. So you'd be looking at a 2 o'clock expiration or a 12 to 2 time period. And I just have to study that a little closer. I back tested it briefly, and at least in recent history, the person is absolutely right. So there might be an opportunity to trade this strategy from 7 to 9 and from 12 to 2. But, I just need to look at that a little bit closer. But no, I do get a lot of questions about, I mean, once this thing expires, I'm off to the FTSE. And from 11 to 1, there's a trade on the ES&P that is called the carrot trade. And on the carrot trade, basically what happens is the market on the ES&P, the market kind of goes, it grinds its way up from 11, from 10 o'clock, hits a place of exhaustion around noon, volume dries up, and it does that. And if you see that carrot pattern developing and you get confirmation that the market's back on its way down, then you sell from the first strike price above. You can also do it. Lately, we've had a lot of morning V patterns. And if you see the S&P grinding its way down and it hits a place where it starts reversing and coming back up, then you want to buy from down there so that you can expire safely in the money. That's what I do from 11 to 1. From I've got a trade that I owe the people at Slick Trade. Crystal Comer came up with a really. She also has some really cool trades, and there's one that she does called the Afternoon Delight, and I just really like it. I'm going to pull up my blog here for a second. That's not my blog. This is my blog. Come on, baby. And all of this stuff is archived on TradingPub. My internet is actually really, really slow right now. All right, this is my little personal blog, and This is the afternoon light trade up, and I trade this afternoon, noon Eastern time. But basically, talk about a simple strategy. Love me some simple strategies. What you're looking for, I'm going to pull up 15-minute charts for the pound dollar, and you want to look after afternoon, preferably after 1 o'clock in the afternoon. What you want to look for is a crossover in the MACD. And in this case, it crossed over from bullish to bearish. The minute you see that crossover, in this case bearish, sell from the first strike price above with a 7 o'clock expiration. And you know, the trading volume in that market sort of dries up in the late afternoon. In that marketplace, if there's a crossover, it just drifts down, or if it's a bullish crossover, it drifts up really slowly. I rarely see this trade threatened. So if I see a nice crossover, particularly if the crossover happens like around 3 or 4 in the afternoon, I'm jumping all over this trade. So very easy setup. You're just looking for a MACD crossover on 15-minute charts with a pound dollar, and you make a decision to buy or sell from that. Okay, oh gosh, you little schnitzel. Here we are. We have 25 minutes left in this trade. I am on 5-minute charts, and the market is threatening me right now. It's bounced above my strike price, so I'm down $41 currently if I bailed. But it's hitting the 50-day moving average. It's acting like resistance. So let's see if we can just bounce back off this moving average and get back to where you're supposed to be. This market has absolutely no respect for the fact I'm doing the presentation right now. However, we could be witnessing also one of the very, very rare losses. When you have a 90% success rate, you're going to have to lose one every once in a while. This is, I mean, to me, it's almost like a historic event when the market beats up. Let's see. I want to just take another look here really quickly and see what our economy is. Well, there's an answer for you. Continuing jobless claims came out. Initial jobless claims, U.S. reports came in nice and positive. That's going to have a positive impact on the, should have a positive impact on the S&P 500. But once again, I mentioned that this particular strategy is really resistant to news. I mean, could the news take it out? It could, because this thing will travel, will knock it. It's sitting right on the line right now. Let me pick up this on the shorter term. Gary asked, would markets with volatility be good for a spread trade? Absolutely. I mean, what you don't want in a spread trade is a sideways chopping market. I mean, you're not going to get much for it. And Ann says the market should come back. I thank you for those words of encouragement. I think it's going to come back down too. Mary Ann says that could be an initial reaction to the move and then a pullback. Could be. All I just know is I try not to overthink it. You know, 90% is 90%. It also means 10% of the time, like especially when you're doing a presentation, it's going to move against you. And let's see, I'm on a 1 minute chart. Yeah, MACD looks like it's going to cycle its way back down. I wouldn't be surprised. I would not be surprised at all. MACD is kind of moving on that time frame. I could see that happening and then maybe this happening. I think it's actually going to be kind of close. What I don't like about it is I really wanted to see, this thing is killing my spread right now, so I'm going to need to let it run a little bit longer or just exit out of it. But I still go back to the, the overall trend of the market. There's just nothing that says uptrend about that hourly, that hourly. 30 minutes. Downtrend. I need to be patient on my spread because I think it's ultimately going to reward me. See how the market gaps away from the T line and comes back up? That's just a retracement. Raleigh mentioned that the U.S. weekly job claims are the lowest since 1973. Nice. Let's keep that trend going. So while I'm doing this, the feedback that I've gotten has been pretty good. Would you guys be up if we made this, say, a monthly event? Y'all don't have to talk. There we go. Because what I'm thinking about doing the next time is swinging over to the evening session and doing something with the Euro Yen and the Nikkei. Now, once a week, I don't have time for that, Rick. Okay, come on, turn around. Come to think of it, this could be a blessing in disguise. If this thing has a 90% success rate, and I'm spending a couple hours of my life talking about this trade in demo and not trading it into my live account, I might have saved myself some money. Bouncing back over to the 1 minute chart. Look at that sucker running up there. You're supposed to turn around and behave. I told, these markets just are not listening to me. You do this, and you got to turn around and do this, okay? Every once in a while, I have to get up in the chair and do a flying elbow drop on the charts. They usually behave once they've been stunned. Draw more down arrows, absolutely. Or just draw imaginary resistance lines. Come on, you got to do this. That's okay. We got 17 minutes left in this particular trade. And all it has to do is behave for me. And once again, I'm going to go back to, I got to go back to the hourlies. We actually had a doji, and it started moving down, and then it moved back up. So it kind of head faked me a little bit today. Goes out of here. Go to the hourly charts on this. Market was gapping down. Let's see what the open. Yeah, I mean, it was slightly bearish. It opened at 15.11 and closed at 15.10. That's enough to be a doji on a downtrend. And I really wouldn't second guess this decision. I expected the following hourly candle to move up, maybe touch, but definitely move back down. And I think the reason why it's getting this push here is from the U.S. economic news reports. But you know, there's still 15 minutes left, and a lot of things can happen. This thing can pull a Tom Brady and deflate its way back down to where I need it to go. Sorry for any Patriots fans out there. Okay, in the meantime, I'm going to get away from this depressing looking chart and move on to the next, move to the setup for the FTSE. Got 15 minutes left in this, I'll come back to it. The FTSE trades off the 9 to 11 chart, which is not available to me yet. But I still want to take a look at it and see where we are. And this is a reminder, in a half hour from now, I'll be passing this over to the folks at Trading Group who will be talking about the opening bell. Okay, here's the FTSE 100 on the hourly charts. That's what we're looking like right now. Once again, looks like it's doing the same thing the DAX is doing. I still think it's going to bounce back down, but we shall see what happens here. And with the FTSE strategy, I'm doing the same thing. I'm just kind of keeping an eye on it. And that doesn't mean, by the way, you need to be glued to your charts. If you're just following the development of an hourly candle, I mean, you can feed the dog, have breakfast, do other things, and then just refer back to the charts every once in a while. You're not watching this market tick for tick. You're just looking for confirmation of a bullish or bearish hourly candlestick, and that gives you your decision to pull the trigger. So let me pull back down to a 15-minute view. It could be a short-term uptrend. It's pretty much sideways. 5 minutes. Crossed over, riding above the T line. Will it break through the 50 moving average? I still have plenty of time in this one. I'm just trying to get I do this across multiple time frames just to kind of get a feel for the pulse of the market. And back to the trading question. Come on, would you please behave for me? You are not behaving. All you got to do, let's see, we have 12 minutes left. We got the Mackie trying to range down. You got to get down right there. I need to see a reversal. There we go. You're trying. That's a little baby reversal. Yeah. Gary says you have to be more proactive in managing spread risk. Yes, you do. You just need to have your spreads up and know when to cut bait. I just know there's so much time left in this trade that I'm not really expecting a huge reversal. I could be dead wrong. Go, 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 go. 10.5 minutes left. No, I really like to see that 90% hold up. The good thing about these trades, once again, if you're used to traditionally trading futures or forex, I mean, what you have up at risk is the most you can absolutely lose. So you have to be comfortable with or prepared to lose whatever you're prepared to lose. But the beautiful thing is you can't lose any more. It's impossible. So I really like managed risk. And when I trade in my live account, I'm trading a fraction of my account. There are going to be days where the trading guides just are not good to you. But with these strategies that I have, the DAX strategy, look at that thing coming down, keep going. The FTSE strategy, the Nikkei at night, the afternoon delight trades, the carrot trade, all of those things that the setup is in play have high probabilities. So even if I take a loss or a partial loss, I can recover in a very short period of time. Okay, Matthew, turning down. Come on, baby. We've got 8 minutes left. This is my strudel strategy, and I haven't had breakfast ready yet, and I want some strudel. I don't want to be left hungry in this trade. For those of you who have never traded Nadex before, is this interesting to you? You're going to download the demo account and play around with it? Yeah, the key to this is the key to trading with Nadex, as I believe with any with forex or futures. You have to have an opinion about what direction the market's going. whether it's up, down, sideways. You have to have a trading strategy for up, down, and sideways. And, you know, you need to have the risk management, trading psychology. A trade like this, what I like about it, even though it's trying its hardest not to play with me, is I know what the odds of success for this thing is. So I can trade this with ease now. It's not when you do the back testing. If you do a bunch of trades, and I did 40 test trades in demo with this before I went live, I knew it like the back of my hand. And I've been able to apply that same methodology to a couple of other patterns that have appeared. So when I found out what works for the DAX, also works for the FTSE, also works for the Nikkei on certain hourly time frames, all I have to see is the pattern. And when it happens, you just do it because you know what the success rate is. Oh, come on. Turn back down now. So we got 5 minutes. By the way, in Nadex, the last 2 minutes of the trade is a dead period. Basically, all these nice little red and blue bid offer prices, they will gray out and turn zero. So what I do is, if the market is, I'm selling right, excuse me, I'm selling right now at this area right here. Here's my expiration. If the marketplace were got down here for a slight profit with 2 minutes left to go, I might exit. It's also moving its way down right now toward there. And with 2 minutes left to go, if it looks like it may not get there or it might reverse, what I might do is just pull the trigger and exit my loss early and try to basically cut my loss in half if I can. Oh my goodness. I trade this thing so confidently because it works like 90% of the time. Well, it does work 90% of the time over recent history. I find it quite amusing that I do this live. And it just decided, maybe it's just trying to, maybe it's just trying to be my best kept secret. Okay, the Nikkei strategy and everything else. Let me just give you a reminder. I'll just post in a link here real quick. I'll show you where to find the archive of all my trading strategies. Okay, I'm posting a link. There's the when I my personal blog, everything goes up to Nadex, so you can, and actually you can sort through them and see them easier up on the TradingPub site. Oh, come on now. Let's see if you got what it takes. If I were trading live on this account with real money at stake, minus 30. I've just got to take that. Okay. I just exited for a $30 loss. I could have lost 80. So that's managing your losers, and it it doesn't sting so bad. Where the market is crawling relative to my strike price, we're going into the dead period now. You can see where the buy and the sell have vanished, all but this little $50 sell target down here, which I would never take. Hey, I managed to cut the bleeding on this trade, which was pretty good because I didn't think I'd be able to get it. Now that I'm kind of out of this, unless there's a huge dive, which I don't expect with 33 seconds left, this trade will expire out of the money. If I had stubbornly held on, I would have lost 80. Instead, I lost 30, which is a great place to be. $11, $10, $9, $8. By the way, one thing when you're trading the DAX or the FTSE with Nadex, these trades take, so it's expired. These trades can take 15 minutes to settle. The U.S. markets settle immediately. The FTSE and the DAX take 15 minutes. So if you see that your trade expired in the money and but yeah, I know now it's dropping. Isn't that the way it always works? Come on, baby, come down a little bit more. Now that you're a day late and a dollar short. Anyway, that's kind of funny. Gosh, now I lost my train of thought because it's all rigged. Now, this 90% of the time I'm in good shape. Today it didn't happen. I cut my losses. I'm going to move on to the FTSE market. Actually, I'm going to close out of this. Okay. That market's diving. I'm down 30 pips on the Germany on the DAX spread. Not liking that too much. I'll give it a little bit more rope, but I might close that one out. In the meantime, let's see our crude oil trade. We got 58 minutes left. We're up $10 on that. I'll pull up that chart. The spread that I have on the pound dollar is gorgeous. I have one contract. I'm up 51 pips right now. If I'd equalize that with 10 contracts for like a Forex trade, I'd be up $500 right now. So that's looking good. DAX is just not behaving properly. But we'll give it a dive. I can always close out of that one. I'm going to refresh my screen and pull up the time frame for the FTSE. Are you freezing? There we go. How's everybody doing? Is anyone trading and having a good? Did anyone have any winning trades so far? Nice. You got on the pound dollar, and you're selling a spread for 112 pips. Good. David was up a few $100s overnight. Okay. Time to move on to the FTSE 100. I'm selecting the 9 to 11 a.m. time period. And we're going to see what happens with this candlestick in 15 minutes. We're going to have the folks from Trading Group will be on. And I'm going to ping them in just a second to, yeah, I'm going to ping them real quick. Make sure that they know that they are. Where did we go? Here's the hourly chart for the FTSE. I need a good name for this strategy. It's the 9 o'clock to 11 FTSE strategy and FTSE 100 strategy. And I could just call it the FTSE, but that FTSE by itself just kind of creeps me out. There is a term called the 11sies, which is a British term for having a light meal at works for me, but that requires a lot of explanation. Right now I'm just calling it the FTSE brunch trade, but I think that's boring. If anyone comes up with a good name for it, let me know. Did you? Oh, what country is this exchange? It's the London exchange. Okay. Yeah. Gamini, what country are you in? You're in the U.S. Okay. So, yeah. I mean, Nadex is a U.S. exchange, the muffin strategy. Okay, I'm digging that. Tea and scone strategy. 11 is more about coffee than food. Okay. But isn't tea more of a British thing? Yes. Yana, if you can put up a link to tradingpub.com/Nadex, we'll give you the information on how to fund an account. You can fund it with as little as $100, and that'll get you started. You can get a demo at tradingpub.com/demo. That'll open up your 2-week free Nadex demo account. And then you can go to tradingpub.com/Nadex, and that will take you right to where to open up a live account, answer a few questions, and you're good to go. You can fund by bank transfer, you can fund by debit card, and it's trades in 46 countries. Right now on the FTSE, the hourly candlestick is a doji, and I've got to take a quick